All right, guys, back to work. Back to work. A pretty darn good day today. Hope you guys made some money out there as well. You might have noticed, though, today, buyers, they had all that chance to run higher today, but something appears to be holding back those buyers. I'll tell you, it's an important clue because anytime we have a bull market like this and we see buyers struggling to push higher, usually that means there's one specific type of entry tactic, entry setup I'm tracking for tomorrow. I'm going to cover that in the video tonight, along with all my other favorite trades I'm tracking for Wednesday. I want to make sure you guys have a game plan, a roadmap to follow to make some money on Wednesday. Now, before we jump in and get the video going tonight, make sure you subscribe so you don't miss tomorrow night's video. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out down in the comments section. Thank you so much for tuning in, supporting the channel. But let's get this video going, shall we? I'm a couple minutes behind schedule, so thank you so much for your patience here tonight. Let's start first right now on the 60-minute time frames. I get the Nasdaq and the triple Qs. I get the Emini and the SPY loaded up in front of us. Boy, there are a lot of important clues right now on the 60-minute chart. On the Emini, you'll notice right now, boy, buyers had the perfect opportunity to jump off the low of this channel today. But as you can see in front of you, right, it just looks like the buyers are running into a brick wall right now. The buyers failing. Usually when you see situations like this, it means we have to go lower before we go higher. That's a really big clue for me, at least, on the E-mini 60-minute time frames right now. The Nasdaq is quite different. The Nasdaq right now is a range-bound market, bullish into a trading range. Buyers are trying to rotate off of the low, rotate back up into that range above us. But as you can see right now, the strength of that move we saw late last week appears to be holding back these buyers right now. When you put both of these clues together, buyers struggling on the 60-minute on the S&P, strong move down on the Nasdaq, trying to finish off that retest. Both of these charts tell us one thing: bear traps. Bear traps are likely where the money is made tomorrow on Wednesday. So we'll talk about a lot about bear traps in the video here tonight. Before we do that, though, before we drill down to our tick charts, I get a bunch of tick charts loaded up in the background right now. Before we dive into tick charts tonight, though, let's double check the calendar for tomorrow because we've got some pretty big news tomorrow morning. That is definitely something I'm watching, and I want to make sure you guys are aware of that as well. There's one kind of news event on my radar tomorrow, that ADP employment number tomorrow. Now, this is normally not going to be a big catalyst. Usually the big catalyst is that employment number coming on Friday, that non-farm payroll number. But, everyone's obsessed right now about the Fed and when they're going to start cutting rates early, middle to late next year. So that may definitely be a mover for us tomorrow. So you definitely don't want to hit that snooze button tomorrow morning and miss the beginning of our trade room. We'll be trading together tomorrow, 8 o'clock Eastern time. The trade room, a front row seat for that ADP employment report at 8:15 Eastern time. Again, it's not usually a big catalyst, but with that big non-farm payroll number and everyone's so obsessed right now with the Fed, I'll be watching to see how the marks react to that ADP report tomorrow at 8:15. So keep that on your radar. But let's get back to our charts, though, because you know this, right? You know this, right? The money is made on the charts. Let's now go over my favorite trades here for tomorrow. We'll definitely talk about a lot of bear traps because, again, both of these charts in slightly different ways are telling us that we're probably have to trap some bears in to make some money here for tomorrow. Let's start first right now on the S&P, and we'll wrap things up here on the Nasdaq. They are quite different charts right now, so you'll definitely want to stick around all the way to the end of the video here tonight. As I mentioned before in the introduction, we've got this bull market right now on the 60-minute. I get this gorgeous channel. We're rotating back and forth. The buyers, we saw some beautiful bear traps this morning, but the buyers, they never had their chance to kind of stretch their legs and get that run. And again, whenever I see the buyers kind of stalling out, usually that means we've got to go lower before we go higher. So I would love to get some bear traps around key support levels. I love that trend line down there, that pendulum. So I love this area down here. Would love to grab some bear traps. Let's now look at the tick charts, though. We use tick charts in our trade room because they make the entry tactics, the entry timing, a whole lot easier. This is a 7,000 tick chart you'll see in the upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA in case you're watching here for the first time. There are really two important clues tonight on the tick charts. The first one is that strong move down. We talked about this in last night's video. It's very important to remember, anytime we see a strong move in one direction, we expect, in this case, the sellers to be trying to take out that low. So we have to assume now, and this goes right along with the idea that we saw buyers they weren't able to kind of get this thing to run today, right? We did see some great bear traps off that pendulum swing we talked about in last night's video, but they just couldn't quite continue where we were hoping here this afternoon. So the fact that they have that big kind of open loop or that unfinished business definitely makes me think those bears are trying to make a run back down to that 53 and a half level. The second clue we see is this trading range. Now, if you're taking my free video classes right now, you know how much ranges matter to me. I love range-bound markets. Ranges, bull markets into ranges, they basically tell us to buy off support levels underneath that trading range or buy breakout pullbacks going higher. So that trading range combined with that strong move down, for me at least, it gives me a pretty good roadmap to make some money tomorrow. My favorite trade for tomorrow will be going lower. I love to see this move go lower here, take out some of these support levels below. If I don't quite make it down to retest that big low, I'm going to look for an entry pattern, which is called a two-try trap. So if all we get is that move off of that 61 3/4, we saw one here today with that 1, 2 and trap up. So if we go lower here, I'm looking for that bears once, bears twice. I want to get that trap entry below that low. I call these two-try traps or crown reversals in our free video classes. About 2 tries there for the bears, and we do that, we can use their stops to fuel the move going higher. If we wind up all the way back down to that low, I'll look for that 2-try failure. Bears once, bears twice. Try to rope in those sellers, use their stops. Think of this as another variation of a bear trap right there. Trap those bears in. Use their stop losses, of course, here to fuel the move going higher. I like the idea there. I also like if we make a run lower, pull back and retest. We call these double bottom retest, double bottom reversals. If we do make a strong run lower into that area of support, I'd love to, once again, 1 try, 2 try, get those bears trying, use their stops as fuel. And oftentimes these double bottom reversals like this, they'll turn into what I call a failure into pullback combination. 2 separate patterns to talk about in the free video course. A failure pattern. Remember, I'm not a big fan of picking tops and bottoms. I would rather find a support level, and I'd rather wait for, in this case, the sellers to get caught getting short here and simply buy into their stops to squeeze and fuel that move going higher. That is one way to do it with a failure pattern. And then again, usually these double bottoms like this, they'll go failure into a pullback combination and then run back up into that trading range you see overhead. One other variation of this is a V bottom. Again, I'm trying to buy off support levels down below. Sometimes the market will V bottom off of that low and pick right back up and jam going higher. If we see a V bottom off that low, my challenge is I don't want to buy high. I want to buy as low as I can. So I'm going to use what we call a bear trap to get it off that low. It's a very simple pattern. It's a higher high in price and a trap right below that low. Make sure you have that higher high in price and that trap below that low. So again, real quickly here, right? If all we get is a shallow pullback, I'll look for that 2-try trap here, trying to buy as low as I can. If I get that really deep move, it then becomes that bears once, bears twice, 2-try failure. And again, a lot of times these will go up and then come back down and retest the low. If they retest that low, I will do it again. 1, 2, again, I'm trying to time that entry best by running stops, right? Trap those bears in and use their stops. This double bottom oftentimes becomes a failure into pullback combination. And like I mentioned before, if it V bottoms off of that low, whatever you do, do not chase it going higher. You want to buy as low as you can with that bear trap. I will oftentimes go out and draw a trend line off those highs, bring it down off that low like that, and man, oh man, you literally you almost cannot lose money on an entry pattern like that. So those are the trades I'm looking for as some bear traps off of that low, which reminds me, if you're watching right now for the first time right now, this might be a brand new language for you. Bear traps, failures, pullback combinations, running stops. What the heck is all this new terminology? But don't you worry, I teach all these entry patterns, and I have hundreds of examples of these setups, all included in my free video classes. What I'll do is I'll put a link up here for you quickly in the upper right-hand corner. Grab that link, take that free video course, because the strategy I teach in that video series will teach you a simple trick we use in our morning trade room to know exactly where the best winning trades are going to be located that day. Once you know that, then I'll teach you 4 of my favorite entry patterns to make it easy for you to start making money on your own. If you're tired of missing the best trades, the markets are way too good not to make money right now. If you're frustrated, you can't qualify for one of those funded accounts with Apex or Top Step, hit that link up there. Take that free course. That will give you an easy roadmap to finding lots of easy winning trades like we do each morning in our morning trade room. And by the way, if you can't grab that link up top there, I'll put all the important links you need in the description of the YouTube video. I'll put the free class links down there, our membership to our trade room every morning at 8 o'clock Eastern time. And also too, I post a lot of updates during the day on Twitter. If you're on Twitter, give me a follow. I'll put the Twitter link in the description there as well. Perfect. So now we know, again, the idea here is that lower before we go higher, right? Lower before we go higher. The challenge is that when we go lower, we don't quite know how low it's going to go. So we're not going to pick the bottom. We're going to pick the stops of those sellers. And I've given you guys a couple simple ways I'm looking for this here for tomorrow. Now, the next big question is, right, what if we go higher? We got some overhead resistance. I got to be careful being a buyer. We know based on that 60-minute chart, the market would love to rip higher. But how do we do it? How do we structure the right entries? How do we avoid getting chopped up and getting fake out breakouts off the highs? Let's grab the Nasdaq here now. The Nasdaq is quite different, but same basic overall game plan. Here on the Nasdaq right now, like I mentioned earlier in the introduction, we are pretty straightforward. It's a bull market right now into a trading range. We talk a lot about range bound markets in our free video course. We call this the pendulum swing, the amount above, the amount below. So we are in a great spot right now for buyers to run this thing back up again and swing back into that trading range. But again, like I said earlier, that strong move down is still, well, look at that. That strong move down, we mentioned earlier, whenever we see a strong move in one direction, we expect a pullback and a retest of that level. Anytime we see a strong move in one direction, a pullback and a retest of that level, strong move in one direction, retest of that level. So we are thinking right now, the bears are not allowing this to go higher because what? Because they haven't finished off that retest. That's where, again, I think that bear traps are probably the name of the game here. Off that trend line, off that swing line, or possibly all the way off that 721. So once we do take out that low, then it seems like the buyers should have the wide open space there to make that run going higher. Let's now go to the tick chart. The tick chart has a couple really important clues right now for us to plan our entries here for tomorrow. Again, much like the S&P, one big clue, a very strong run down. That's that 721 and a quarter level we talked about earlier on the 60-minute. You have to think right now the sellers are trying to take this thing back down to that low. And if you recall back on the S&P, I would love to get that buy off of that low. That would be a fantastic trade for us tomorrow morning in our trade room. The second big clue right now is this trading range. This is, of course, a bull market into that trading range. I mark the amount above the range. I project that now down below the range. That gives a very good level of support. As you recall earlier, whenever we have a bull market into a trading range, we're trying to buy off support below that range because that range acts like a magnet. We also know, too, there's also one big channel on the chart right now, and it looks like even though the bears had a good chance to run this thing lower, the buyers are clearly holding off the low of that channel. This is certainly a window of opportunity right now for the buyers to blast this thing and rotate off the low of that channel. So we definitely want to talk about that here as we go deeper into this video. Now, not a lot is different on the Nasdaq if we go lower. If I go lower off like that trend line off that low, swing level, pendulum swing, if I see a modest pullback right now, I'm going to use what's called a two-try trap. It's basically two tries for the bears, buying as low as I can with a bear trap. You'll see a lot of examples of those inside the free video course. If we do wind up all the way down at these lows now I'm not so worried anymore about buying too high anymore. Now we start looking for that double bottom reversal, that two-try failure, right? We run lower. I don't know. I don't have a crystal ball. I don't know how far this thing will go. So all I can do is simply time the entries, waiting for those bears to commit a little bit. Once they're in, then these are stops, right, to fuel that move going higher. And a lot of times, again, you'll get that run down. You'll get the entry. It'll pop up, hold another level of resistance, come back and retest that low. That, in my eyes, is even a better entry now because now the bears have retested that low. In come the rookies. The rookies come in. They try to sell a couple times. These double bottom retests are some of my favorite. These are oftentimes the biggest winner you get. Oftentimes the first one is kind of contained because of all the momentum going lower. But once they take out that low, oftentimes we can trap those bears in with that two-try failure. And as I mentioned before on the Emini, that failure into pullback combination. I wish I had time to go over all the specific rules and everything for the entry tactics, but again, I'm going to cover all that stuff in that free video course I linked up in the upper right-hand corner. Now, here's the big question next, right? We left off on the S&P. What if we go higher here? If we go higher, the name of the game is don't chase it. All right, that is the name of the game. Now remember, the Nasdaq has a ton of space to run, just like the S&P does. Right, there's a ton of space to run here, so there's a lot of different ways in which we can trade this. If we go higher, the first way is whenever we have a range breakout like this, there's one specific type of pattern I look for. It looks just like this. It's a strong run up. It's a shallow pullback. It's a higher high in price. It's a trap below that low, right? Good example there of a signal candle, a one-to-one first target. Stop moves up to that point of entry, and unfortunately, this one today, we're stopped out right on the point of entry after that first target. But this is the nuts and bolts, though. That is that bear trap as it runs higher, right? So if we see a strong run going higher, if we see a shallow pullback that barely touches that moving average and makes a higher high in price, that's your giveaway now that buyers are going to be looking for. Again, these are simple bear traps we teach in the free video course. Higher high in price, good signal candle there, one-to-one first target, leave the runner up around key levels of resistance I found on the 60-minute chart, right? Pretty simple idea there. The tough part now is that oftentimes we'll get that pop up, we'll get that bear trap, and the market explodes going higher, and it's very tempting to want to chase after this. We cannot chase after a bull market. I realized that earlier on in the month of November, it kept going up and up and up and up, but that's not going to happen most of the time. In these cases, what I'll do is I'll go out, I'm going to find that range and think about basically think about prior levels of resistance that I can now begin to use as support. Okay? Think about about what was resistance, right? It's currently resistance right now. But if I can get a good breakout, I'm going to try to use that resistance now as an area of support. And most of the time what will happen is we'll get a sharp pullback. That will get us underneath the 21 moving average. All right. And anytime, okay, write this down. Promise me, write this down. Anytime we see a strong move higher in an overall bull market, again, this is not a bear, it's a bull market overall. Anytime we see a strong move higher that separates away from the 21 moving average in a bull market, when I get underneath that moving average around support levels, this is where you look for that failure into pullback combination on the way back up to retest that high. It's one of the easiest ways to make money in a trending market. Remember, again, one more time, bull market overall, strong move that separates away from that 21 EMA. Get underneath the 21 moving average. Don't pick that bottom. Picking tops and picking bottoms is very difficult. Like back here, right? Don't pick that bottom. Wait for the price to pull back. Let those bears get short. And once they fail, then you can buy, right? Then you can buy going in from there. So again, strong run up, get below that moving average, right? Again, off support levels. This is basically buying a breakout pullback, right? It's basically a breakout pullback. That's all that is. The hard part is that after you make money on that bear trap, oftentimes my monkey brain is so overconfident, right? I'm so wrapped up in how amazing I am. I'm kidding with you, obviously, but I'm sure I'm not the only person that's made that mistake, right? You're making a bunch of money as the market rips in your favor, and sure enough, right, you get caught buying a shallow pullback again. It's too high up now. Wait for that correction. This is a very important lesson to learn, right? I can get aggressive when the market is early in the move, right? I can get aggressive when it's early in the move. But as we get later in that move, I've really got to be disciplined, especially if you cashed a big paycheck off that bear trap breakout. Be disciplined to go out and look for support, wait for that pullback. And again, that pullback is probably not going to be a reversal. It's probably going to be a bear trap failure there. So just be aware of that failure into pullback combination. The other variable, and I wouldn't normally talk about this, but because we have such the potential for a short squeeze, this could really rip right back into this range here at any moment at this point. Again, I'm hoping we go lower before we go higher right now, but we have to be aware, right? With that range above us, we're only one Powell speech away, one, jobs report away. We're only one news report away from crushing this thing right back up into that range again. So because that potential is there, I'm going to be keeping an eye out tomorrow for what we call a pop and grind. Okay, pop and grind. So oftentimes what happens is it'll pop up, and we don't get the bear trap. We don't get the big move, right? It kind of pops up and begins to grind going higher. Okay, you will quickly learn to love these patterns, because all you do is you draw a trend line off the highs, you mark a channel now off those big lows. And like I talk about in the free video series, I look left, I find prior swings, and really all I do is try to get down to that channel, get underneath the moving average, and you can pretty much just pick whichever entry setup you want to use on this. I like to get traps below prior swings. Below the moving average is where a failure pattern will set up, right? A failure into pullback combination. What's nice about pop and grinds too is that not only does a pop and grind give you the entry location to look for, okay, off the low of that channel, but it also tells you the size of the pop, okay, the size of that pop leg, right? That now can be used as a measuring leg to tell you how far that trade will go. One thing we're always talking about in our trade room is if you want to make more money, don't trade more often. Just get better at making more money on the trades you're already taking. One way to do that is to trade more contracts. The other easy way to do that is to simply get better at staying patient to let the trade work for you. So this is always one of my favorite kind of chart patterns. It pops up, starts grinding higher. We draw that trend line off of those highs, bring it down off that low, and then it really is any of the entry patterns you guys are learning inside the free video course can be applied off that low. Once you do your job getting in though, stay patient for that pop and that measured move as it goes higher. Okay, does that make sense? And again, remember, keep in mind, I'm simply kind of drawing on the screen right now. Nobody knows where this market goes tomorrow, but at least now we have a game plan on this to make money no matter what the market throws at us. And of course, tomorrow morning, we'll get together. We'll trade this stuff together tomorrow. We'll fill in all the blanks that we missed here for tonight. One last thing. If you want to sell a bull market, okay, if we make a run going higher here and I want to sell going back down again, for example, if we get that breakout pullback, I can short off resistance up here, but I'm going to want to use one of those crown reversal patterns. If you were to wrap together a failure along with a bull trap, that would be a crown reversal pattern, okay? So buyers try once, lower low. Buyers try twice. That would be your bull trap off of that high. Okay, so again, very bull market up into levels of resistance. We're expecting a pullback, but it's tough to time the entry. It's tough to time the entry to bull market like this, getting short on this. So instead of trying to pick the top on this, wait for buyers to try once, go lower, wait them to try twice, grab that bull trap above that high. That is what you call a crown reversal. So if you're wondering, how could I short this thing during that pullback, okay, and then pick it up after the pullback and run it back up again? That's exactly how I'll be looking to do it tomorrow morning in the trade room, right? Okay, so again, it's a failure and a bull trap combined together into that crown reversal. A lot of examples of that pattern set up inside the archives on the website as part of the free video course. All right, guys? Boy, I'm getting excited for tomorrow. We've had a really good week so far. Had a huge day on Monday. A pretty good day today. But again, it almost feels like the market needs to go lower right now before we go higher. We'll see if it all comes to it tomorrow morning. And don't forget, I can't think of any better way to learn this stuff and trade this stuff than to come out and do it with me tomorrow morning, every morning in our trade room. The markets are always throwing curveballs at us. It's easy to make mental mistakes and lose lots of money. I'll keep you on the meat tomorrow morning in the trade room, 8 o'clock Eastern time. I'll put all the important links, the membership links, the free video course links, my Twitter feed. If you're here for the first time right now, absolutely start with the free video course, learn the basic strategy, get that momentum going for you, and then soon enough you'll be ready to come out and trade with me sometime soon in the morning trade room, 8 o'clock Eastern time. Get any questions, any trouble getting access to our free video class, you can always call the office or use live chat. I'm always here to help out every step of the process. All right, guys, great job today. More good stuff coming tomorrow. Hopefully I'll see you tomorrow morning, 8 o'clock Eastern time as a student in the trade room. If not, same time, same place, back tomorrow night. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.